Hello, everyone, and welcome. Before diving into today's analysis of Bitcoin and crypto pricing, I want to touch upon something fundamental to how we seek information. As humans, we often gravitate towards individuals who project confidence and seem to possess deeper knowledge. There's a natural desire to find mentors or figures we can learn from and perhaps even emulate. This inclination can be powerful, but it also makes us susceptible to readily accepting information, especially in complex fields like finance. Keep this in mind as we explore the often certain pronouncements in the crypto space. I want to address a prevalent issue: the confident predictions surrounding Bitcoin's price movements. It's easy to be drawn to those who speak with conviction, reinforcing that initial desire to find someone who seems to have it all figured out. However, I believe anyone claiming absolute certainty about future price direction is likely misinformed or attempting to sell something. This is because, in efficient markets, any definitive information would immediately be factored into the price. The example of dividends and stock options is useful here, where the price adjustment is predictable due to regulations. The absence of such immediate price jumps in crypto suggests that most price predictions are speculative. Remember that feeling of wanting to believe someone has the magic formula? It's crucial to maintain a critical perspective. This aligns with the efficient market hypothesis, which suggests that asset prices fully reflect all available information. While perfect efficiency is debated, the core idea highlights the difficulty of consistently outperforming the market based on readily available information. I emphasize that the most reliable information about an asset's price is found directly within the market itself. The price of a freely floating asset reflects the point where supply and demand meet, driven significantly by those with substantial capital and, presumably, sophisticated understanding. This perspective underscores the power of collective intelligence in financial markets. The aggregated actions of numerous participants, each acting on their own information and analysis, contribute to the formation of market prices. The discussion then shifts to the options market as a richer source of information compared to simply observing the underlying asset's price. Options, which are contracts giving the buyer the right, but not the obligation, to buy or sell an asset at a specific price on or before a certain date, reveal market expectations about future price volatility. The volatility smile, observed in different asset classes, is informative. For the S&P wink with tongue sticking out 500, this smile typically skews towards higher out-of-the-money put option prices, reflecting a greater fear of downward shocks. Conversely, commodities often exhibit a smile skewed towards higher out-of-the-money call option prices, indicating a greater concern for upside price surges. Interestingly, Bitcoin presents a more symmetrical, U-shaped volatility smile. This suggests that the market perceives significant risk of both sharp price increases and decreases. The high at-the-money implied volatility further indicates a general lack of confidence in Bitcoin's future price stability among informed market participants. This dual fear could stem from various factors unique to the crypto space, including regulatory uncertainties, technological risks, and a nascent stage of adoption compared to traditional assets. I want to critique individuals who confidently make price predictions and sell courses based on purported expertise. It's easy to see how someone projecting unwavering certainty can become a figure of perceived authority. However, I believe the options market provides a more transparent and reliable gauge of market sentiment than the pronouncements of self-proclaimed gurus. Drawing a parallel to election betting odds and the actions of informed individuals like politicians suggests that observing actual market behavior and financial decisions is more telling than verbal assurances. Remember that initial point about our tendency to seek out confident voices, it's crucial to question the underlying basis of that confidence. This highlights the importance of critical thinking and due diligence when seeking financial information. Relying on verifiable market data and understanding the underlying principles of market dynamics can be more beneficial than following potentially biased opinions. I acknowledge the existence of both bullish and bearish arguments for Bitcoin, emphasizing that the ultimate outcome remains uncertain. Common bull arguments, digital gold, institutional adoption, and bear arguments, competition from other cryptocurrencies, lack of intrinsic value compared to elements like gold, exist. The core message is that financial markets, by their very nature, are uncertain. If future prices were known with certainty, they would adjust immediately. In conclusion, understanding how markets, particularly the options market, price assets can offer valuable insights into the collective expectations and uncertainties surrounding them. Instead of solely relying on confident predictions that tap into our desire for guidance, focusing on market data can provide a more objective perspective on the perceived value and risk of assets like Bitcoin. Thank you for watching. What are your thoughts on this perspective? Share your opinions in the comments below. If you found this analysis helpful, please like this video and subscribe for more content on navigating the complexities of finance and investment.